So what will lowering rates ultimately mean for the housing market? Let's bring in Zillow senior economist Orphe Divounguy. Orphe, great to have you with us.
Thanks for having me.
So at this point, with supply being constrained, you lower the rates and you increase demand. What happens here? Are you risking, heating up the market?
Yeah, look, the reality is, markets are forward-looking, and so Fed expectations pretty much priced in. Mortgage rates started falling back in August, and affordability remains a challenge, but things are improving very fast, right? Incomes are still rising at a pretty decent pace. Wages up 3.8% from a year ago. The typical mortgage payment has actually decreased by about 3% during the same time period. At the same time, buyers have more options than they've had in the past few years. The number of active listings on Zillow is up 22% from a year ago. But the share of listings with a price cut may have actually peaked, right? So you're going into a slow season that may not be as slow as usual, potentially because there will be some buyers that are looking to strike a deal.
If a buyer knows that rates are going to be coming down even more because 50 basis points is just the beginning in an easing cycle, do they wait on the sidelines? Do they wait for rates to go lower? So does it actually sort of gum up the works in the housing market?
Look, again, markets are forward-looking, and so while short-term rates are expected to decline gradually along with the Fed funds rate, longer-term rates like mortgage rates could remain anchored near the current level. So my advice to buyers is waiting is risky. If you think about what's happening here, the markets are really, the Fed did not do anything the markets didn't already expect. It's basically delivered what the market already expected. And should the Fed not deliver rate cuts, the rate cuts that it showed in its summary of economic projections, mortgage rates could actually go up from here. And so I tell buyers waiting is risky. You might want to act now instead of waiting because rates could actually go up. So, today is kind of the perfect entry point for buyers. They have more options. Bargaining power has shifted somewhat from sellers in favor of buyers. The market is slightly more balanced. And so it's probably the best time to hang on to the lowest rung of the housing ladder.
It's Karen. Thanks for being on today. I want to talk about the other side, the supply side. How much in cuts really start to get to sort of shake the trees of all that existing inventory to come back on the market?
Look, what we're seeing is a big increase in refinance activity. You're seeing a lot of people who probably bought when rates were much higher starting to think about, securing a much lower mortgage rate. And I think that's kind of the right decision to make for people who, bought recently and plan to be in their homes for a while to secure a lower rate. If you look at the typical mortgage payment, it's fallen about $1,200 a year just from this spring alone when mortgage rates peaked. And so it will save them tens of thousands of dollars over the life of the loan. As for sellers, will the improvement in affordability bring some sellers back? I think we'll see more buyers than sellers in the housing market. Zillow data shows that well-priced homes and well-marketed homes are still selling in just 20 days. So if you're a seller today, you're still in good shape because homes are basically moving faster than they did before the pandemic.
Just curious, Orphe, are you able to see how many price cuts, a seller will have to endure at this point?
Yeah, the share of sellers cutting their prices is about 1 in 4. 1 in 4 sellers cutting their prices in Zillow data. But I think that might have actually peaked. If you look at builders, builder confidence has increased. The share of builders offering incentives has gone down. The share of builders offering price cuts has gone down. So you're seeing that potentially the affordability improvement is getting foot traffic up, and maybe more people starting to look again at moving right away before, just in case basically rates start inching back up.